Something massive just happened. Almost overnight, India's biggest renewable energy project, a $10 billion solar energy deal meant to power millions of homes, has just collapsed. And the cause? Not a natural disaster, not a financial crash, but a sudden policy change from Beijing. Without warning, China introduced a new trade rule that blocked key components, like solar panels and inverters, from being exported to India. That single decision didn't just delay the project, it killed it. Factories shut down, contracts got canceled, and thousands of jobs tied to the supply chain vanished in a matter of days. One Indian energy firm reportedly lost over $300 million in a single week. The Indian stock market felt it immediately. Shares of green energy companies dropped sharply. Politicians scrambled to contain the fallout, while news anchors called it economic sabotage. But this isn't just about solar panels. It's not even just about India. This is a calculated move, a power play in Asia's growing economic chessboard. And it could change how two of the world's largest countries trade, fight, and partner in the years ahead. So what led to this bombshell? And why now? Let's go back and look at the deeper story behind this collapse. This $10 billion collapse didn't come out of nowhere. In fact, the writing's been on the wall for years. China and India may be neighbors, but they've been anything but friendly trading partners. Behind the scenes, their relationship has been strained by both economic rivalry and military tension. Let's start with the border. In recent years, deadly clashes between Indian and Chinese soldiers in the Himalayas have left dozens dead and sparked outrage across India. These weren't just minor skirmishes. They triggered a wave of anti-China sentiment across the country. India responded with policy. Prime Minister Narendra Modi launched a bold push for self-reliance, calling it Make in India. The idea was simple. Stop depending on Chinese imports and build things at home instead. That included everything from smartphones and pharmaceuticals to solar panels and electric vehicles. But there was a problem. China still dominates many of these key industries. For example, more than 70% of solar panels used in India are imported from China. And Chinese companies control a huge chunk of India's smartphone market and pharmaceutical raw materials. So even though India wanted to cut ties, it was still deeply linked to China's supply chains. And that $10 billion solar energy deal? It was one of the few big collaborations still standing, a rare point of economic cooperation in an otherwise tense relationship. Now even that has been shattered. The bridge that once symbolized hope is gone. And the question is, what exactly did China change that made it all fall apart? At first glance, China's new regulation didn't seem like a big deal. It was buried in technical trade documents, something about quality standards and compliance certifications for exported solar equipment. But analysts quickly realized this wasn't just red tape. It was a targeted strike. Beijing had quietly changed the export rules for solar components, specifically requiring that all products headed to certain countries go through an extra round of inspections and approvals. India, not surprisingly, was on that list. This wasn't about safety, it was about delay. These new checks added weeks, even months, to delivery times. For large-scale projects in India that relied on tight deadlines, this effectively froze the supply chain. Panels sat in Chinese warehouses, and Indian developers were left with nothing. This is what experts call a non-tariff barrier. It's not a tax, but it's just as damaging. Think of it like a roadblock thrown up in the middle of a marathon. You're technically still allowed to run, but good luck reaching the finish line on time. Why did China do it? Some believe it was retaliation. India had banned dozens of Chinese apps in recent years, including TikTok and WeChat, citing national security. It also restricted Chinese investment in key sectors. Others say China is trying to protect its own industry by forcing global partners to look inward or elsewhere. Whatever the reason, this wasn't just bureaucracy. It was a carefully placed economic landmine, and India stepped right on it. So what happened next? Let's look at the fallout. Within just 72 hours of China's new rule, the impact on India was brutal and widespread. At the center of it all was India's booming solar energy sector. One of the country's largest solar farm developers, which had signed contracts relying on Chinese-made panels, suddenly found itself stuck. Shipments were halted. Construction sites went silent. Over 20,000 workers were sent home without pay. But it didn't stop with solar. Auto manufacturers, many of which rely on Chinese electronic parts, got hit hard too. One major car maker reported delays in launching 2 new electric vehicle models. Why? because critical parts were trapped at Chinese ports, tangled in the new regulation. Then came the chain reaction. Small and mid-sized suppliers began folding. Companies lost millions in penalties for missed deadlines. In Mumbai, one factory owner said, "It's like someone pulled the plug on our entire operation." The shock reached India's financial sector as well. Investors panicked. Shares of energy, manufacturing, and tech companies dropped sharply. The rupee weakened against the dollar. And in a rare move, the International Monetary Fund lowered India's growth forecast for the year, citing geopolitical trade instability. This wasn't just an economic hiccup. It was a body blow. The human cost was impossible to ignore. Jobs lost, families in distress, and confidence shaken. And all of it caused by a rule that many outside India didn't even notice. But other countries were watching and getting ready to move. As India struggled to pick up the pieces, the rest of the world wasn't just watching. They were adjusting. Vietnam and Taiwan were some of the first to react. Both countries have been quietly building their own manufacturing strength, especially in electronics and solar tech. With China now seen as unreliable by Indian businesses, Vietnamese and Taiwanese suppliers saw an opportunity. Orders began shifting. Indian companies started contacting alternative vendors, even if it meant paying more. But here's the catch. Replacing China isn't cheap. China's supply chains are massive, fast, and deeply integrated. Vietnam and Taiwan can help, but they can't match China's scale overnight. That means costs go up, delays stretch out, and profits shrink for companies trying to adapt quickly. Meanwhile, the US and European Union offered quiet support to India, not through public speeches, but through trade discussions, private business visits, and diplomatic messages. India's role in the global economy just got more attention. Still, there's a growing concern in the West. China's move to block trade without firing a single shot is being seen as a warning sign. Economists are calling it weaponized trade, a way to punish or control rivals using supply chains instead of soldiers. One U.S. official said anonymously, "If it can happen to India, it can happen to any of us." So while India suffers in the short term, the long-term effects could reshape how countries think about their economic dependencies. And the big question is now unavoidable. Is this the beginning of the end for China-India trade? This isn't just a $10 billion problem anymore. It's a turning point in one of the most important economic relationships in Asia. For years, India and China have had a complicated trade partnership. China is one of India's biggest suppliers of electronics, pharmaceuticals, and machinery. India, in turn, offers a massive market and growing influence in the global south. But now, trust is broken. Some analysts believe this moment could trigger a full-blown decoupling, where both countries start pulling apart their economic ties. India might respond with more bans, higher tariffs, or push even harder for its Make in India campaign. That means trying to produce more locally and rely less on imports from China. But this kind of shift takes years, not months. And it comes at a price: higher costs, slower growth, and short-term job losses. On the other hand, there's still a chance both sides walk back from the edge. Some insiders believe quiet diplomacy is already underway. There are whispers of backdoor talks, trade envoys meeting in neutral countries, and both sides looking for face-saving compromises. After all, a total economic war helps no one. Still, many experts warn this clash could speed up something even bigger: the rise of two separate economic systems. One led by the United States and its allies, another by China and its partners. It's a scenario some call a bipolar global economy. If that happens, countries like India will have to make hard choices about who they align with, who they buy from, and what risks they're willing to take. Because this isn't just about trade, it's about power. India is at a crossroads, and every path forward comes with serious challenges. Option 1. Go all in on domestic production. This is the heart of Prime Minister Modi's Make in India vision. The idea? Build everything at home: solar panels, electronics, auto parts. It sounds patriotic and long-term. It could create jobs and reduce dependence on China. But the reality is tough. China has spent decades building factories, training workers, and scaling production. Matching that scale isn't something India can do overnight. It will take massive investments, strong supply chains, and time. Lots of time. Option 2. Build new alliances. This is where the China plus one strategy comes in. The US, Japan, and Europe are all looking for alternatives to Chinese manufacturing. India could step in, partner with Western companies, join trade agreements, and become the next big hub for global production. But it's a race. Other countries like Vietnam, Indonesia, and Mexico are chasing the same goal. India will need to offer more than just cheap labor. It needs better infrastructure, faster logistics, and fewer bureaucratic hurdles. Option 3. Negotiate with China. This is the most politically risky option. Sitting back down with Beijing may look like giving in. But for now, China holds a lot of the supply chain cards. A temporary deal could bring stability, protect jobs, and give India breathing room to prepare for the future. However, critics argue this sends the wrong message, that China can act aggressively and still get what it wants. So what's the right move? There's no perfect answer. Every option requires sacrifice. But one thing is clear, India must choose wisely because the next step could shape its economy and its global role for decades to come. This story isn't just about India and China. It's a glimpse into a much bigger shift happening around the world. For years, global trade has been built on one simple idea: depend on each other and everyone benefits. But now, that idea is being tested like never before. When a single policy in Beijing can wipe out a $10 billion deal in India, it raises a hard question for every country and every company. What happens when trade becomes a weapon? Industries around the globe, from tech to energy, are watching closely, because if it can happen to India, a rising power with 1.4 billion people, it can happen anywhere. Are you in manufacturing? Your suppliers might suddenly change? Are you in finance? Stock markets now swing with every geopolitical move. Even consumers will feel it through higher prices, delays, and fewer choices. This breakdown is a warning. Depending too heavily on one nation, even one as powerful as China, comes with real risks. So what's next? That depends on how countries respond. Will they double down on partnerships, diversify supply chains, or dig in for a new kind of economic Cold War? Whatever happens, one thing is clear. The age of business as usual is over. And here's a question you should ask yourself. Is your country, your industry, or even your job too dependent on China? Stick with this channel, and we'll keep breaking down the stories that really matter, so you're never caught off guard.